The year is 2025, and a new economic chill has settled upon the world. Gone are the days of free-flowing trade and global cooperation. In their place, a trade war of escalating tariffs and retaliatory measures. The United States, once a champion of open markets, now finds itself embroiled in a tit-for-tat battle with economic rivals, most notably China. The stakes are high. Global markets, already on edge, are responding with a volatility not seen in decades. Stock markets are tumbling, with the Dow Jones Industrial Average experiencing its sharpest decline since the 2020 pandemic crash. Investors, once eager to pour money into a booming global economy, are now pulling back, seeking refuge in safe haven assets like gold and government bonds. The uncertainty is palpable. The current trade war is not merely a dispute over tariffs. It's a symptom of deeper geopolitical shifts. The post-World War II international order, painstakingly built on principles of free trade and multilateralism, is being challenged. This is a battle for economic dominance, technological supremacy, and geopolitical influence. And as with all wars, there will be casualties. Tariffs, often touted as a tool to protect domestic industries, are a double-edged sword. While they may provide a temporary boost to certain sectors, their long-term impact on the overall economy is far more complex and often detrimental. The current trade war is a case in point. The initial salvo of tariffs, primarily aimed at Chinese imports, has reverberated throughout the global supply chain, disrupting industries and impacting consumers worldwide. The most immediate and visible impact of the tariffs is rising prices. Consumers are feeling the pinch at the gas pump, the grocery store, and even when purchasing everyday items like clothing and electronics. Businesses, large and small, are also grappling with increased costs, as tariffs drive up the price of raw materials, intermediate goods, and finished products. The impact, however, extends far beyond price hikes. Industries heavily reliant on global supply chains, such as manufacturing and agriculture, are facing significant disruptions. Factories are being idled, farmers are struggling to find buyers for their crops, and the threat of job losses looms large. The service sector, while less directly affected by tariffs, is not immune to the broader economic slowdown caused by the trade war. In these turbulent times, it is more important than ever for individuals to take proactive steps to safeguard their finances and navigate the uncertainties of the trade war. The key is to adopt a multifaceted approach that includes diversification, careful monitoring of economic indicators, and an assessment of both short-term risks and long-term opportunities. Start by reviewing your investment portfolio. Diversification is crucial, especially in times of market volatility. Consider shifting some of your assets away from sectors heavily exposed to international trade, such as manufacturing and energy. Instead, explore opportunities in domestic service sectors such as healthcare, education, and technology, which are less susceptible to the vagaries of global trade tensions. Keep a close eye on economic indicators. The trade war is a fluid situation, and its impact on the economy is constantly evolving. Stay informed about the latest developments, including tariff changes, economic data releases, and government policies. Pay close attention to inflation trends, as rising prices can erode the value of your savings and investments. While the current trade war presents undeniable challenges, it also underscores the importance of long-term financial planning and a strategic approach to investment. Rather than succumbing to fear and uncertainty, savvy investors can leverage this period of disruption to identify emerging opportunities and position themselves for future growth. One key area of focus should be industries that stand to benefit from the ongoing geopolitical realignment. The trade war has exposed the vulnerabilities of over-reliance on a single country or region for critical goods and services. As a result, governments and businesses alike are seeking to diversify their supply chains and reduce their dependence on China. This trend presents opportunities for investors willing to look beyond the immediate turmoil. Sectors such as renewable energy, biotechnology, and artificial intelligence are likely to see increased investment and growth as governments prioritize domestic innovation and self-reliance. Similarly, companies with a strong track record of adaptability, innovation, and a commitment to ethical sourcing are well positioned to thrive in the long term.